I mean, the oil price works in two ways, of course, as you know. It works to cause disruption in credit markets and challenges in the sort of financial and credit conditions space that can feed back into the wider economy if banks pick up on that. But it also works as a stimulus. So a lower oil price in many ways has an enormous benefit for the world economy. And in fact, our calculations show that the cost of the world's oil is down about 1.5% of global GDP in the last 3 or 4 months since the start of this year. So it kind of works both ways. I mean, it's clearly disruptive in the short term, but I think in the medium term, it's really a very big positive, especially if you remember that coming into this year, the big theme was Western consumer starting to drive global growth. It wasn't China. It was the US households, even backed up by those in Europe. Now, I know the global economy's changed a lot, but certainly in terms of helping the US household cash flow, and indeed to a lesser extent the Eurozone and European household cash flow, it's very important that the oil price is low. But as I say, it's disruptive for financial markets in the near term.
Everything being equal, that would be absolutely the case, wouldn't it, Chris? But while we've now got the global economy effectively put on ice, there is no travel, there is no flying, there is very little in terms of shipping activity because the factories are just not producing the goods that need to be loaded on the cargo ships. That lower oil price and the benefit of that surely has reduced impact on corporate revenues, on all the things that it should be helping.
Yeah, I mean, there's a lot of moving parts at the moment. You're quite right. And we're dealing with an economic a lockdown because of the health situation and therefore the economic implications of that, which is very challenging. But the market's trying to grapple with how long the lockdown will go on for, and therefore how much of a demand hole you're going to get in the global economy, but also how much you're going to get in global oil demand. So, you know, the market's trying to put the numbers together. You had the Trafigura chairman on your program last week talking about an annualized 30 to 35 million barrel drop in demand. I mean, our numbers sort of see that sort of range, 4 to 5, 6 per month, I think kind of makes sense. So, you know, if the lockdown only lasts for a month or two globally, then activity can start to normalize. And then the benefits can start to be felt from a lower oil price later in the year. As with many questions at the moment that we're all grappling with, it comes back to the health situation, the lockdown, and getting on top of that.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.